Raman Aggarwal, Chairman at FIDC. So we understand that you've compiled some data on NBFC disbursements for the month of August, September and October 2018. What does the data indicate? Can you share the findings with us?
Yeah, so we did this data compilation at the behest of Ministry of Finance when we had a discussion with them. So some interesting points have emerged. First, if we look at on an year-on-year basis, August 2017 to August 2018, there was a growth of about 17%. And similarly, September 2017 and September 2018, if we compare, the growth was around 18%. But come October, and that is where the real hit started, October 2018 saw a sharp decline of 15% in disbursements as against October 2017. Now, let's understand that if the decline is 15%, the actual impact is somewhere around 30%. Because as I said, the growth was around happening average 15%. So not only that 15% growth came to zero, there was a decline of 15%. So overall impact is about 30%. And if we look at on a month-on-month basis, from September 2018 to October 2018 itself, there has been a sharp decline of 30% in the disbursements. So which clearly indicates that while NBFCs have been very much able to meet the liabilities, and to that extent I don't see any cause for worry, the real worry is that the growth is getting heavily impacted and the credit delivery is suffering. Credit is not going in the system.
Credit is not going into the system. You're saying that the real decline might be 15%, but the impact is going to be 30%. Mr. Aggarwal, I want to understand how much of that could be offset by what the Reserve Bank announced late evening yesterday, at least with reference to securitization, if it's relaxing norms, and you're having the likes of Indiabulls Housing Finance, which have led to this kind of a problem as well with what happened in the markets. How much can be offset? Have you been able to get a sense of that as yet? Because obviously if their financial position is improved, maybe we could see lending coming back. It'll take the pressure off the banks as well.
See, while any move from the regulator is always welcome, because more than the actual benefit, it sends the right signals in the market that yes, the regulator is aware of the situation as responding. Having said that, let me say that this circular is directly after the representation which we at FIDC had made. Now, if you look at the norms which have been relaxed on the minimum holding period are only for loans which had original maturity of more than 5 years. Now that, if you look at, is again a business model of long-term finance players like the housing finance companies, and as has been rightly said, that this will be more beneficial to the housing finance companies. If you look at a typical NBFC model, the NBFC model is below 5 years. So it's up to 2 years or 2 to 5. And the present norms are that up to 2 years, we need a 3-month retention minimum holding period, and 2 to 5 years, the minimum holding period is 6 months. We had requested RBI to reduce this 6 months period also to 3 months. That has not been done. So in my view, in fact, it is that window, if that can be addressed, that will be give a real big boost to NBFCs. So it is more important to address that 2 to 5 year window also.
We've seen what's happening in the bond markets. We've been hearing murmurs about this as well. For example, the Lodha bond. There are a couple of real estate companies which have been talked about as being risk when it comes to repaying loans, a default situation. How bad is it? We keep hearing about how there may be a systemic risk. You can have an economy which is up and about with the real estate sector about to collapse. I know there are other fears as well. Let's say if I've taken a loan from an NBFC, which I'm not able to now continue to make those payments, I can't get my papers from the NBFC to switch to a bank as well. So those are problems that even, forget the banks, that viewers are facing, home buyers are facing. They're in a tough spot.
No, you are absolutely right. See, as I said, the whole system gets disturbed. The entire credit delivery process had got disturbed. And that's where our key point has been that while there is no crisis per se, that I don't see a situation where there will be some kind of a major defaults happening in meeting the liabilities. The real worry is that the credit delivery is not happening, and that, as you rightly said, is reflecting heavily in the real estate sector. In fact, the data which we compiled, and we did it across the product segments, in fact the construction and mining equipment segment is one of the worst affected, and that is directly in consonance to what you said, because the real estate sector has suffered the most. So the prime objective here is that not only focus on the crisis situation, but more importantly to ensure growth in the credit. If we are to talk of overall growth in the economy, the credit has to grow, and to that extent we are seeking support from RBI and the ministry.
You're taking the time out to joining us here from our studio. So that's an update of what's happening in the liquidity with respect to NBFCs. Some measures good, but that's Raman Aggarwal, the chairman of FIDC, talking about how the window should have actually been for 3 months and not 6 months. Real estate still a scary situation. Let's see how this one pans out.